A story that is coming by the way of savings. Are Indians savings enough? If not, is it because they are not earning enough? All those questions, of course, in realm of speculation. But the story that is breaking is that household savings are at a 5-decade low, a decadal low. What's happening?
So, Shweta, yes, you're right. If you look at the number as a percentage of the GDP, household savings are at its lowest ebb in 50 years at about 5.1% of the GDP. Compare this to the same percentage of GDP last year, it was at 7.8%. So there has definitely been a decline in household savings from 7.8% to 5.1%. Now, at the same time, the household liabilities, the loans that households have taken, have incidentally gone up from 3.8%, a good 2 percentage points up to 5.8%. So, what these two data points suggest to you is that households are saving less and households are taking more loans. That is what these two sets of numbers tell you. Now, the big question is it bad news? Look at data, not just these two data sets, look at data in its entirety. What is happening? Now, of course, the Indian economy is also growing, $3.75 trillion. As a direct volume of that, even a lowered, savings from 7.8% to 5.1%, as overall the size of the economy may reach almost a same volume figure between last year and this year. But how does it matter? The fundamental question is, if you have lesser amount of money in your bank, is it a cause of concern?
Okay.
One school of thought says, yes, absolutely, cause of concern. You don't have enough for the rainy day. There is inflation. Inflation is eating into your savings. You're spending more from the money you had saved to deal with your day-to-day consumption, to deal with the soaring vegetable prices, tomato prices, onion prices, veg thali, etc. that we have spoken enough and more about. But then there's another school of thought. The other school of thought says that you're saving less because you're investing more. You're saving less because you want to reduce your EMI by putting a larger chunk of your savings as down payment.
Okay.
Whether
Hang
it is
on.
buying
Is
a house.
investment not saving?
Investment is not saving.
Okay.
In fact, the National Stock Exchange, SEBI, RBI, everybody has been, for the last almost a decade or so, at least if memory serves me right, has been talking about this concept of financialization of savings. When you invest money, it is financializing your savings. When you save money, it is just money lying dead in your bank account and drawing you a much lower rate of interest as compared to an investment that you make with that money. So, look at data of SIP inflows. Month on month on month, you're seeing retail participation in financial markets going up. So, people are putting lesser money in their banks and perhaps more money in stock markets. Through SIPs, through mutual funds, direct retail trading, as the case may be. Look at car sales. Car sales for the first half of FY23 had reached the figure of 1 million cars. 10 lakh cars were sold in India between 1st Jan and 30th June. Look at housing data that comes in. People are borrowing more money to buy more physical assets. That's something Finance Minister Nirmala Sitharaman has also said. But
so
her statement,
SBI report yesterday.
Absolutely, her statement came, I think, much after you and I had that informal discussion, discussing what's the big deal about financial, savings, household savings going down.
Okay.
Now, every country also works on debt. You have a debt to GDP ratio in excess of 80% for any average emerging economy. So, growth by default happens on debt. You leverage yourself to be able to buy assets which you don't have the financial muscle to procure by putting an upfront down payment. Okay. So, savings reducing on account of inflation. Inflation alone is a cause of worry. Had we seen this decline in savings without that inverse correlation with housing doing better, with car sales doing better, with FMCG consumption, not doing as well, then there was a cause of concern. But when you juxtapose this data of reduced financial savings, increased borrowings, keeping these other data points in mind, I think it is a signal of growth. It is a signal that Indians have finally understood that keeping money in the bank does not beat inflation. A saving bank account gives you nothing more than, at best, even in an increased, high rate environment that we are living in, 6%, 6.5% rate of interest. All of that is subject to a 30% tax if you're in that tax bracket. So what you actually get in hand by keeping money in your bank account, would be nothing more than about 4% or so. So 4% versus inflation, definitely in excess of 6%, 7%. So you actually end up losing money by keeping it in the bank, as opposed to market returns over 10 years. Stock markets have given you about 12%, 13% return.
Okay.
So financialization of savings is a story to celebrate, and reduced household savings in
worry
the
too
context
much.
of all this data is
Okay.
nothing to worry
All
about.
right. So my colleague there, not worried about household savings at 50 years low, especially if you take into account other data points that have come in by the way of not just, if it were just inflation, that would be a sign of worry. But if it were to be, as SBI points out, people investing in immovable assets like property, putting it in mutual funds, that is something to celebrate. What is not to be celebrated is perhaps people buying more cars, people buying more consumer items.
Not to be celebrating. I
Well,
think
I mean,
it is definitely a cause of celebration.
Okay.
You are financially mobile. You are
but it's very
channelizing your
consumer. I think that's consumerism
how else
at
will
its peak.
industry fire?
Okay,
If people don't
makes
buy
sense.
cars, how will the auto sector is pretty much the reflection of the health of an economy.
Okay.
If car sales are doing well, you know that your urban economy is firing well. If scooter sales are doing well or two-wheeler sales are doing well, you know that your rural economy is doing
But
well.
household
And if
economics
EV
will tell
sales-
you that one car is enough, don't end up buying 3 to 4, which is also a concern. A lot of people
I'm not sure that's practical.
Okay.
Do we have the public infrastructure right now? I mean, it's going to take me, if I take the metro from the sector where I live to office every day, if I take the metro, it is going to take me about an hour and 10 minutes to get here. If I take a cab, I'm still spending about 500 rupees up and down every day. Am I not better off creating an asset which gives me the comfort, the convenience, and at the same time help the auto sector grow, which also pays GST, which also employs more people, and hence the multiplier by account of me buying a car versus taking the metro, I think is much, much higher.
Okay, well, it's a long debate, but nothing to worry about as far as household savings is concerned.